Let's talk a little bit about what rates really are for equipment leasing. And when I say really are, what I mean is if you're looking around on Google or you've typed in equipment leasing rates or equipment loan rates, there's a lot of misinformation. You may see ads that claim interest rates at 5% for equipment leasing, and that's not true. If you see a company doing that, usually you can Google that company and you put the company's name and then reviews, and you'll see a whole laundry list of times that people said this was the rate and it was 5 times what they said it was going to be. Also the equipment leasing calculators, most of them are just totally wrong. They have very misleading information that's totally not true. So that's something to be careful of. The big thing, the reason why there's so much misinformation out there about the rates is because a lot of equipment leasing companies are afraid if they tell you what the rates really are, you're not going to do any business with them. And that's just wrong. The fact is the interest rates are what they are. I mean, for equipment leasing, if you're not going through the bank or doing it with a dealer who's going to make a bunch of money, they're all over the board, depending on your business, what kind of equipment you're leasing, in your situation. But I tell you right now, they're not 5%. That's just a scam. So let's talk a little bit about why the interest rates for equipment leasing tend to be high. I mean, if you're a small business, there's a lot of risk lending to you, especially like a new small business. You have a 44% chance of not being in business for the whole time that the lease is valid for. So the company has to price in a certain amount of risk because a certain percentage, in fact a pretty large percentage of the people that lease, whether it's a dump truck or computers or restaurant equipment or whatever, aren't going to be able to pay. And so the equipment leasing, and also usually you're not leasing a Honda to drive your kids to school in. I mean, you might be leasing heavy equipment and you're going to use it to break rocks. And so that equipment's going to depreciate really fast. And then they could try to repo it and sell it, but by that time they're not going to get anything. So the key is you should be able to do business with companies that are going to be transparent with you about what the rates are. I mean, and to a certain extent, the interest rate doesn't matter. Look, if you're buying a dump truck, let's say, and you're going to drive that dump truck 50 hours a week, and you're going to bill at $75 an hour, and after you take out all the expenses, the gas and the insurance and everything related to running the dump truck and running your business, and you're going to be left over with, let's say, $9,000 minus what your truck payment is. And if on a low interest rate, your truck payment would leave you with $8,000, and on a high interest rate, the truck payment will leave you with a little bit less, maybe $7,000. Well, that's still better than driving somebody else's dump truck. So you should be able to take a look, get real numbers, regardless of what the interest rate is, and make a smart business decision. And we talk about that a lot on our website. That's why we call our business Smarter Finance USA. We give, whether you're just looking for information or you're going to lease with us, we'll give you all the information and everything you need to make an informed business decision and not give you any runaround. So if you're on our website currently, there's more information in the article below and in other articles on our website. If you're viewing this on YouTube, there's a link below this video that'll take you to the blog post that talks more about this. And thanks for watching, and hope you found this helpful.